Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we're going to be talking about something very important. And I want you to all understand what's happening. As we have been talking about fiat instability, and as we look at where crypto is now, I've talked about why I believe that crypto itself is going to gain a ton of momentum as well as a lot more value this year. I also believe the same for gold and silver. And when I say that, I mean physical. And it's mainly because I see a lot of individuals out there that are starting to realize and starting to lose confidence around fiat currencies, especially with the recent bank collapse that we've seen around SVB. But also outside of that, it really does give us 2008 vibes. As we look back in time, though, I will say going all the way back to the 70s, look at the US dollar and its spending power. It has lost 98%. Let me reiterate that. 98% of its purchasing power. Now go back just a decade ago, okay? 2013. Look at Bitcoin's price in 2013 to now. Now go back to the US dollar and look at the US dollar's spending power. The spending power is the important factor there. Individuals, and I mean the retail sector, gets completely slaughtered financially. And we have been for decades. But crypto is the key that is opening the door for many individuals to not only take control, but also gives them certainty around their money. Now, as we do see here from Jeffrey Tucker, actually, the dollar's just not going to be king. Adding that we are at a turning point for the US dollar. De-dollarization. One of the biggest things that I've been reporting on is the BRICS. They have been moving away from and actually causing a lot of noise in the mainstream media now around the US dollar. But this has been going on for well over a year now since the sanctions that we put on Russia. But also even outside of that, this has been a decade-long plan. Going all the way back to 2010, we started to see the BRICS gaining a ton of momentum within purchasing gold. And today, again, we still have no proof of reserves within the US on how much gold we hold. But outside of the US, we have seen the BRICS stockpiling massive amounts of gold. But we do see here, the governor of China's central bank has said rate hikes by Western nations have fueled global financial instability. He is not wrong. Again, you can kind of see what's happening here. We are seeing a war on currency, but we are also seeing the, right now, currently, the BRICS expanding de-dollarization, meaning they don't want to utilize the dollar anymore. They want to move away from the US dollar, and this is going to continue to grow and grow and grow. And I've said it time and time again that once we start to see the US dollar shifting in terms of it losing its overall reserve status, that is going to put things into motion around a great monetary reset. Now, over here, we do see China and India are each buying 1.5 million barrels of crude oil a day from Russia. Russia is now exporting more crude than it was before the war. Yes, this is going to continue, right? As we look at the overall movements from Russia in just the last year alone, we could see that our sanctions have done absolutely nothing to stop Russia from expanding and ultimately thriving financially. Within this, we also see the IMF is warning that the fragmentation of the global economy into rival trading blocs runs the risk of prompting a new Cold War. We are watching the fragmentation happen in real time, and soon BRICS is going to get much larger as they work on a new reserve currency. Historic. And yes, I've talked about this. As they look into a new reserve currency and creating a new reserve currency, it begs the question, what is the US going to do? What is their plan? I'm going to get to that here in a second. And then over here, we do see major moves are underway. Today, Brazil's president said he supports the idea of BRICS nations coming up with an alternative to replace the dollar in foreign trade. More and more details are beginning to come out. We recently learned that commodities, including gold and others such as rare earth elements, could potentially back the BRICS reserve currency. The BRICS alliance has received interest from more than a dozen countries in joining the bloc. These countries are commodity powerhouses. This is what a monetary reset looks like. And yes, we are seeing it outside of the US, while we barely see it on mainstream media. We recently just started to see mainstream media picking up the idea of the BRICS expanding and questioning the US dollar's reserve currency status. But beforehand, we were reporting on it. We were talking about it. And now it is becoming a reality. Now, I want to take a step back real quick and pinpoint you to this. Housing is so unaffordable that banks are losing money for each mortgage they finance for the first time ever. Why is this interesting? Well, yesterday I made a thread, or I should say I made a tweet talking about things happening around banks within the US. As we are starting to see banks lose money for the first time ever on mortgages that they finance, it begs the question, what's going to happen next around the banking sector? Because as we look over here, I said yesterday, I strongly believe that the FedNow service, which is coming in July, is about to cause systemic damage to the banking system. Reason why, you ask? Simple. 1, banks are operating on a liquidity crunch at the moment. Combine this with recent spikes in withdrawals and, well, banks are being constricted. With this, combined with them losing money for the first time ever on mortgages that they are financing, we are about to see a major collapse of the banking sector. I also said rate hikes can definitely increase banks' earnings, but ultimately will still lead to systemic collapse. The problem currently is going back to 1, banks are constricted on lending capital. This means lending is starting to slow and will most likely lead to banks hesitant to lend. 3, last but not least, the FedNow service will allow for 24/7, 365 instant settlement. Now think about this logically. Our system is running on an antiquated infrastructure still. Combine this with the fact that liquidity is drying up and banks are practically insolvent, and it's a recipe for disaster. The traditional system was slow, yes, but it also bought time for banks when things started to go south. Now introduce an instant settlement 24/7, 365 payment system without proper liquidity, and boom, banks begin to go bust at an alarming rate. This is exactly why I say I believe the FedNow system is an attack purposely on the current financial system to cause mayhem to introduce CBDCs. It's the perfect excuse and reasoning behind it. I also would love to note the FDIC bail-ins, meaning your money in a bank account, whether it be $250,000 or less, meaning guess what? If you have less than $250,000, yes, technically it would be covered by the FDIC, but when times get rough, they could essentially bail in your money no matter how much you have in a bank account. And it will be utilized to save the wealthy and the banks. Now, why am I bringing this up? Why am I talking about this? Well, again, I strongly believe that this is going to be the case, and I'm not the only one. Caitlin Long actually made a quick video on this, or I should say there was a video on this posted when Caitlin Long was actually talking about it at Blockworks, and we did see the FedNow instant real-time payment service going live in July. Zero acknowledgement that the speed of settlement will increase bank run risk inherently. They don't get it yet. Listen closely.
And if you look at the balance sheets of the banks, virtually none of them are sitting on enough cash to back demand deposits that can be withdrawn at the speed of minutes now. So here's the thing. It used to be you had to go to a bank branch and fill out a paper form to make a bank withdrawal. Now you can do it on your phone. What's interesting is that the bank regulators have for a long time hated the most tech forward banks. They like the concept that everything has to be analog because it slows everything down. Just yesterday, the Fed confirmed that FedNow, which is the new payment system that is ultimately going to replace FedWire, is coming online in July. And it's a 24/7, 365 system. And there was a lot of information in the press release about the testing requirements that the banks that are going to be rolling it out in July will have to comply with. There was zero acknowledgement that the speed of money movement is going to increase inherently when you get a real-time system. So we were talking about how long it takes for you to put the payment instruction in, analog versus online banking or API. But now there's also speed up of settlement once the instruction is received by the bank. And that is going to be real time. Now, FedNow only limits you to $100,000 at a time, but $100,000 at a time equals increased bank run risk inherently. And I was floored that the Fed said nothing in that press release about requiring the banks that are going to be offering FedNow to hold more liquidity. It means they don't get it yet.
And this is exactly what I've been trying to make a point about for ever since we heard initially that FedNow was coming out, because this is a major issue. Now, the biggest problem with all of this is that, yes, I do believe that this is going to lead to them wanting to bring in CBDCs, because what they're going to say is this. Well, with CBDCs, it makes the entire system more transparent. We could see the risk brewing before it actually happens. We could also allow for fixes with it. It allows for better liquidity. It allows for all of this, blah, 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 all this nonsense that's going to say, well, it's beneficial for you. It's not. It's absolutely not. It's you giving up your control and your freedom around money, your money. Now, like I said, this is all brewing for a major monetary reset. According to a financial counselor at the IMF, central bank digital currencies will change the international monetary system. This topic has been extensively documented for years, yet numerous individuals continue to dismiss it as a conspiracy theory. It's all out in the open. What to expect in the years ahead: central bank digital currencies, gold stablecoins, currencies backed with commodities, common currency mechanisms for trade. This is all leading us to the monetary reset, where commodities are poised play a significant role. Now, listen, I don't believe that these central bank digital currencies are good for us. I've talked about this. Call it a conspiracy, call it whatever, but they are not beneficial for us. They are here to take away your transparency, take away your control, give more control to the central bankers, because that's all they want. They love power, they love control. But the problem that I see right now is a lot of people say, well, I still have fiat currency in my bank. I'm still good. My bank account's fine. I'm under the $250,000 FDIC limit. I'm okay. I can buy this. I can buy that. I can stockpile this, whatever. I have plans with my money. That's fine. But the thing is that central bank digital currencies, whether you like it or not, will essentially replace fiat currency. I believe fiat currency will be fully replaced by these CBDCs. They say that fiat currency will exist and coexist with central bank digital currencies. No, I don't believe that. It makes zero sense for what they want to do with these central bank digital currencies. It's all about taxpayer money. They want to make sure that everything can be documented. Everything is transparent for them. It's not for our benefit, like I said, but all of this is centered on that last point too, is that like, okay, yeah, you might have fiat currency in your bank account. You might have money in your bank account. The problem is that, guess what? That bank account is not your bank account. That bank account belongs to the bank. It's the bank's money. The money's actually not there, and they could do whatever they want with that money. Meaning, guess what? Yes, those FDIC bail-ins, those are a real thing. You guys could do the research on them. They are 100% a real thing, and it happened after 2008. And the thing that scares me the most is how much reserves the FDIC actually has. They only have, and by the way, this is from January, the end of January of this year, they only have $125 billion in reserves to ensure $9.9 trillion in deposits. Not even 10% is covered by the FDIC. Think about how crazy that is. This is why I've mentioned that the FDIC is not going to cover deposits. They're not going to be able to insure deposits. Liquidity has dried up. We still don't even know if we're going to raise the debt ceiling, which we most likely will, because hey, that's what the world runs on, debt, which is again another example of failed fiat currency mechanisms. The debt, utilizing debt and selling our debt just to pay interest on. It's ridiculous. It's a cycle of consistent debt creation. It's built upon fairy tale land, if you will. But escaping this through crypto is 100% a possibility. As everyone wants to look down on crypto and make jokes about crypto and say this is that, whatever, crypto is technically sound money. It is. When you look at some of these projects out here, I'm not going to sit here and lecture you guys on Bitcoin because I just don't care to talk about Bitcoin. But there's other utility opportunities within crypto that allows you to not only become your own bank, but also move money at the speed of light at a fraction of a penny. I mean, crypto itself, long term, has been extremely resilient. And I believe that it will continue to be, and I believe a lot of individuals are going to turn to crypto, especially as we start to see them invoking CBDCs onto the general public and talking more about CBDCs, because again, this is a major risk to our privacy, to our, overall right with currencies. I mean, it truly is, scary on where we are headed, but this is all by plan. The FedNow service is all by plan. I believe that they get it. I don't believe that they don't get it yet. I believe that they get it, but I believe it's all pre-planned. Again, call me a conspiracy theorist if you want, but when you actually look at what's been happening around fiat and around the overall system, there's been a lot of things that have pinpointed to the fact that almost all of this, nearly everything that we see around our monetary system is pre-planned. But the banking collapse, it truly is scary on where we are headed, because even the Treasury General Account, which Finance a Lot actually posted this over on Twitter on April 12th. We do see down here, the U.S. Energy Secretary says the country plans to refill its strategic oil reserves. This is absolutely impossible, by the way. We do see with what money. Like, look at this. It's practically emptied. We do see TGA is dropping $130 billion per month and dropped $50 billion the past week. At this pace, the government will be out of money in 2 to 3 weeks, meaning the FDIC won't have any capital for insured deposits and complete shutdown of government. Still no mainstream news organizations reporting on this, and they won't. They won't. The same with all of what's happening, because again, this is all by plan. And I believe that it's all leading to the largest collapse in financial history within the US. And it's all going to be to usher in the Great Reset, which is going to be a monetary reset, but it's not going to be one that's looking pretty for retail. It's going to be great for central bankers and those that are in control of finance. But for us, yeah, we get screwed. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, to notifications on if you guys have more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As it's up to you all, have a beautiful day or a beautiful night, wherever you guys are in this beautiful world. This has been Nick. Peace out, guys.